Here are the steps I want you to follow right now. Step number one, I want you to write a business plan. See, the whole thing is that a lot of startup founders, they're trying to get a loan, but they have no foundation for their company. If you have no foundation for your company, how are they going to trust you? And the thing is that when we talk about writing a business plan is first and foremost a navigational tool. I want you to get that in your mind, a navigational tool. In other words, it's a GPS that you can use yourself to actually guide your strategic decision making. Very important. So you got to write a business plan. And I have said this on this show, on other shows. It's really important to actually customize your plan. I'm talking about writing a plan from scratch. Please, 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 please do not go on the internet and download a cheap ass business plan template and sort of come and customize that plan to suit your startup. Never do that. Never. If you are serious about getting a 10 grand, a 20 grand, a 30 grand, 50 grand, 100 grand in startup loan with no revenue, you have to be able to spend $100 or $200 to have someone write a business plan for you. Or if you're good at business plan writing yourself, just go ahead and write it. Okay. And the good thing is there are also some software tools that allow you to write a business plan. So you have a Beast Plan, you have Enloop, you have Live Plan. So those software tools are really great when it comes to helping you write a business plan. So bottom line is what, boss? You got to write a business plan. Okay. And when we talk about having a business plan, I'm talking about having things like executive summary, company description, market analysis. You want to talk about your service or product line, your marketing and sales. And you have to talk about your funding request. How much do you need? And most importantly, how are you going to repay the loan? The thing is, a lot of startup companies, they want a certain amount of money, right? You ask them how much you need. Well, I need 100 grand. Okay. But one important element that actually is left out of the whole equation is, how are you going to repay that loan? I don't have a problem. I'll give you $1 million. I'll give you $1 billion for that matter. But my question is, how are you going to repay me? So when you write a business plan, make sure that you talk about your business model. You're talking about the monetization model, how you are going to make money, and to make sure that you have enough financial projection data so that the lender can see that you will derive enough revenue to repay the loan. Step number two, you got to decide what type of financing you want to apply for. And this is one thing that we see a lot in our research. We see a lot of startup founders having no idea about the kind of loan they want. See, the whole thing is when you are looking for a startup business loan, you have a constellation. You have a variety of business loans. You can't just I just want a regular loan. What do you mean by regular loan? You got to be specific. So when we talk about startup business loan with no revenue, this could be a line of credit, a startup line of credit with no revenue. This could be a micro loan. This could be a short-term loan. This could be equipment financing. And this could be a merchant cash advance. So when we talk, I just want to quickly define what we mean by equipment financing. Equipment financing basically means that you want to buy a car, you want to buy a business car, okay, or you want to buy some business machinery. So what you do is you go to a bank or a credit union or a specialized lender, and you say, listen, this is what I want to buy, and I want you to finance the acquisition for me. So what will happen here? This is kind of similar to when you buy a personal car or you buy a house. So basically, the lender will keep the title to the assets. So they'll give you the machinery, but they'll keep the title, so that if something happens, whatever, and you're not paying them, they will come and repo that equipment. So that's what equipment financing is. And for that, you really don't need revenue, because the loan is based on the collateral. Okay. And let's talk about a merchant cash advance. So a merchant cash advance is not technically a loan. Instead, A merchant cash advance company will typically partner with your credit card processor. Then what will happen here is that the MCA company will give you a lump sum of cash and collect repayment by taking a percentage of your daily credit card and debit card sales. So let's say that you basically process your startup will process in the next 30 days, let's say $50,000 worth of credit card and debit card sales. So the MCA company will give you some kind of advance and will recoup the cash afterwards. So it's really important to decide what type of financing you want to apply for. I want to really continue the conversation about the type of financing, because when we talk about startup business loan with no revenue, the list doesn't stop at MCAs and equipment financing and short-term loans. You also have Invoice Factory, right? So Invoice Factory is pretty simple. By the way, I want to quickly remind everybody of today's topic. We are talking about how to get approved for a startup business loan with no revenue. So when we talk about Invoice Factory, this basically means what? It means that you are selling a percentage of your invoice's face value to a factoring company. That's how those factors are called, factoring company. So the factoring company gives you, let's say, 70%, 80%, or 90% of the invoice's face value. The percentage depends on the credit history of the underlying customer. So if you have a customer that is credit worthy, well, then the factoring company will give you 90%, or even in some cases, we have seen factoring companies giving the company actually paying 95% face value. Okay, so it really depends on the credit worthiness of the customers. So what happens here is that when the customers pays, the factoring company will collect the outstanding balance from the customer. So this is how they make money. And you also have personal loans and financing. Don't forget, when we talk about startup business loan with no revenue, sometimes it's just impossible to get a loan. I mean, you've tried everything, and this is even worse if your credit score is really in the FICO basement. If you are in the low 300, 400, 500, then you're really out of luck. So in that case, what you want to do is you got to think about personal loans and financing. I mean, if you have some cash yourself, okay, this is not technically a loan, but I'm just exploring with you the list of avenues that you got to think about. Okay, ideally, you want to get a startup business loan with no revenue. So you do your stuff. You actually have your business plan. You actually have your financial projections. But if stuff happens, if they don't like what they see, if the lenders don't like what they see, then you have to actually maybe get a personal loan. Or just maybe rely on friends and family. If you have an entourage that is financially set, then maybe they can help you. The third thing you want to do here is you want to check your personal and business credit scores. Okay, so step number one, you got to write a business plan. Step number two, you want to decide which type of financing you want to apply for. Step number three, you want to check your personal and business credit scores. Now, remember, when we talk about, we are speaking about a startup business loan, right? So you might be asking me, well, why do I have to care about my personal credit? Well, this is very simple, because the thing is, if you're a startup, unless you are able to apply for a loan using EIN only, the lender is going to rely on your personal credit worthiness. Especially if you're a single member LLC, if you are a one-person company, then your personality, your person is mixed with the company. And so this is really important that you check your personal credit score to make sure it is accurate. Okay, there are no some kind of a derogatory items there that you don't recognize, things that people actually playing with your social, and so in other words, you're a victim of identity theft. So those are important things you got to think about. So and when we talk about checking your personal scores for a startup business loan, I'm not talking about a one-time thing. This should not be a one-time thing. Ideally, and this is what we tell all our clients, you gotta have a system in place whereby you check your credit score every often. I mean, every month. Some people do it every month. Some people do it every quarter. We do it in our team. We do it every 2 weeks. It's just a matter of personal preference. If you like to check your credit score every month or every 3 months, just go ahead and do it. But the more often you check your credit score, the better you are in a position to actually catch whatever mistakes might actually cripple your application. And it's really quick. It takes only 5 minutes when we do it. So that's for personal credit score. You might be asking, well, if I have a startup business, why do I have a business credit score? Well, there are some startups that have a business credit score. Yes, they do. Because they were really fast at registering with Dun & Bradstreet and getting their DUNS number. And also because the founders of the startup, they are able to actually mix, in other words, parlay their personal credit score into a business credit score. We actually have an entire show that will talk about that. But yes, there is it is possible rather to constitute a business credit score even if you are a startup. Next thing you want to do, you want to compare lenders. Okay, boss, I just want to quickly remind you of today's topic. I'm having a conversation with you about how to get approved for a startup business loan with no revenue. So you want to compare lenders. The reason is that if you remember earlier, I was just talking to you about the fact that when you talk about startup business loans with no revenue, you have a whole smorgasbord of a whole variety of startup business loans, from Invoice Factory to merchant cash advance to business line of credit for startups to installment loans for startups. So you do have a variety. So you got to be clear about what really works for you. This is why it's really important for us where we say that you want to comparison shop. Very important. And you want to comparison shop because you want to reduce your cost. And the thing is, when you look online at what lenders are offering, you want to constantly shop around for the best fees, interest rates, and repayment terms available to you before you apply. Okay. And I want you to really cast a water net. So you want to start with your current bank or a credit union, and then you take it from there. You want to look at what the big banks are offering. People will be telling you, hey, listen, when you have a startup, banks don't want to talk to you. You have no chance of being approved. This is really further. This cannot be further from the truth. The reason why people are saying this is because they don't know how to apply for a startup business loan with no revenue at a bank or a credit union. Because the thing is, if you're a startup, usually or generally, you have no revenue. And banks know that. Banks know that if you're a startup, if you're a brand new startup, you have no revenue. The whole thing is you got to be able to convince them that, hey, listen, I may not have a revenue right now, but my business model is so strong. My business model is so strong. I'm going to generate revenue very soon. If you're able to articulate that argument, if you're able to articulate that vision, you will get your business loan even if you have no revenue. This is really important. So comparison shop, you want to be prepared, have your business plan, have your pitch with you, have your projected financial statements also. The next thing you want to do here is you want to gather required documents. See, the thing is, you can do all the research. You can write your business plan. You can have your pitch. You can decide what type of financing you need. You can check your personal credit scores and business credit scores. You can compare lenders and whatnot. But when it comes time to apply, you got to gather the required documents. Okay, so it's really important to always make sure that you check with the lender before you start gathering anything, because the last thing you want is to actually have a gap. You don't want to have a chasm between the data that you have, the paperwork that you have, and what the lender requires. You'll be surprised. A lot of folks do that. People actually assume that because you're looking for a startup business loan, you're going to go with a general list of requirements. even though some lenders might have some specific items they want to look at. Okay, so lenders are really different. Lenders are different. So this is why you want to, if you see a lender in whom you are interested, then you want to have a conversation with them. Ideally, you want to have a conversation over the phone or at a branch, if this is a national bank, for instance. So it's always important. And one thing I also want to say here is that you need to actually make sure that you have in all cases, you got to have your business plan. You got to have your articles of organization if you are an LLC or a partnership, or articles of incorporation if you are a C corporation. Okay, you got to have your registered agent service. You got to have your certificate of good standing. You got to have your licenses and permits. So anything that really projects an air of legitimacy on your company, you want to actually gather those documents to be able to prove that. Okay, and don't take this lightly, because if you're trying to get a larger amount, the lender then wants to make sure that you are really prepared to handle that larger amount. Okay, so this is why, and we always say first impressions count, and this is not only when it comes to job interviews. First impression counts also when it comes to applying for business loans, especially if you need the money real quick and you want the lender to start looking at your file and be happy. It's important to gather the required documents. And also, one thing I want to say here is that when we talk about gathering the required documents, you're not just gathering paperwork and just be for the sake of gathering paperwork. Okay, you have to be selective. I want you to discriminate here. Okay, you got to identify what you qualify for. This is important. I mean, remember, I was telling you earlier that there is a variety of business loan options for startups that are looking for business loans with no revenue requirements. So what do you qualify for? And you can't answer that question if you have not been in talks with a lender, if you have not exchanged emails, if you have not have conversation calls or have phone conversations with the lender. So this is really important. I mean, because if you are a startup and you are looking for a business loan with no revenue, you got to look at things holistically. What does that mean? It means that not only you are looking for the type of financing you want to apply for, but you also need to identify at the same time what kind of financing you can apply for, but also qualify for. So that because the last thing you want is to waste your time, and you don't want that. You don't want to waste your time and realize, hey, listen, why did I apply for this loan? Here I am after so many years. Now I'm just going through my stuff, and I realize I'll never get it. So this is why you want to seek advice from multiple parties if you want it, or you can read about it. But when it comes to actually making when it comes to choosing the right lender, make sure that you choose the one that fits your business model. And some lenders, make sure when we talk about identifying what you qualify for, some lenders have a time and business requirements. Obviously, when we talk about startups, there is a spectrum when it comes to, I would say, when it comes to time, because a company can be a brand new startups, like they just are fresh out of the oven, or you can have a startup that has been in business for, let's say, 6 months or 9 months, and technically they're not startups, but in everyday jargon, people actually use the word startups if they were referring to a company that has been in existence for 9 months. Sometimes you have companies that have been in existence for 1 year or 2 years. They're still called startups. So be clear about that. So the last thing you want to do here is you want to submit. So you've done all the paperwork. You have actually done the data collection. You have done the data gathering. You're comfortable with the paperwork that you have. So it's important to submit. Now, some lenders will want you to submit at the branch. If you are dealing with the bank, a lot of banks, if not all of them, they want you to go to a branch, have a conversation with the loan officer before submitting the application that you need. And but if you, the same thing applies for credit unions. There are some lenders, for that matter, who don't leave. They're comfortable. They're comfortable if you send the required documents online. So it's really important. That's why I want you to talk to them. Do they want you to submit the data online, or do they want you to submit the data at the branch, or are they comfortable taking your data over the phone? Sometimes they also might want you to send them an email, okay, where you actually attach your business plan. You attach your business licenses, copies of your business licenses and permits. They might want you to actually attach also your certificate of good standing. So again, the bottom line here is you want to talk. You got to talk with the lender to make sure that you're providing the kind of valuable information they need from you. Okay. And one thing I also want to say here is that when we talk about submitting your paperwork, please make sure that you are looking at, before actually going with a loan, any loan for that matter, make sure that you're looking at three important things. You want to look at the total cost. Don't just look at the interest rates. You want to take fees into account. Sometimes you might have an administrative fee. It can be 3 to 6%. You can also have an early payment fee. Okay. And so I want you to account for all those fees into the calculus here. And so besides the total cost, you want to look at the amount and term. So does the startup loan offer as much as you want for as long as you need? So think about that. And the repayment. So how quickly do you need to start repaying the loan? And are the payments manageable for your startups at this particular point in time? So those are really important things to think about. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how to get a startup business loan with no revenue. So we spoke about business plan, the type of financing you need, okay, checking the personal and business credit scores, comparing lenders, and gathering required documents. Thank you so much. I appreciate it. I will see you next time. Until then, remember, stay marvelous.